What's up? This video is going to be on SoFi Technologies, ticker symbol SOFI, and this is just going to be like a roundup, or like a weekly roundup of all the news and all the events that have occurred that may have some type of impact on SoFi's business or SoFi in general. So starting off with the big elephant in the room is going to be the rate cuts, right? The 50 basis point rate cut obviously had a big impact on basically everything that SoFi does, right? First of all, with a 50 basis point rate cut, basically the cycle is going down, right? So now we're going to a cutting phase. SoFi is going to have more business with their mortgages, right? With more people refinancing, more people just getting loans and things like that, right? With a lower interest rate means more people want to partake in like taking business ventures. All those things are really bullish in terms of having more business volume for SoFi Technologies. Now you might be wondering, well, I mean, like regardless, these people are going to be like, they're going to have multiple choices, right? Why don't they go to Chase? Why don't they go to some other like fintech to do all this stuff? Well, this is what makes me so bullish on SoFi, is that their unique position that's much more different than almost everyone else in this space, right? We look at Robinhood. Literally the day of, this was literally on Wednesday, they changed their interest rate that you get for money left in your invest account. They changed it from 5% to 4.5%, literally the day of interest rates. They issued this difference. So seeing that SoFi hasn't actually really like dropped it that dramatically, shows that SoFi Technologies has enough buffer room in order to keep their interest rates high, whereas all your other fintechs, especially like the fintechs that require like an underlying bank, all those companies are basically forced to lower the interest rates, or they're going to be forced to take it in the margin and they lose money or they earn less money for offering this type of rate in order to basically get customers to use their product or use their services. Well, you might now be saying, okay, well, that might be true, but SoFi being a bank, why don't people go to other banks, right? Well, that's where I believe that SoFi, just as a rule of thumb, I feel like they've been really they've been able to manage their risk really well, and they've been only really targeting those high quality, high credit customers, right? The above 740 credit score customers. And then because otherwise you have the other banks that are kind of more risky and they're trying to earn as much money as possible, and then you have things like this, that's not it, this one, where you have JP Morgan, Wells Fargo, Bank of America lose $5 billion to push rotten debt as credit card delinquencies surge. See, this is crazy how basically all the other banks are saying, well, people are struggling to pay off their debts. People are struggling to maintain like a status quo, and they're losing money. It doesn't matter what they're spending it on. The fact is that the credit card delinquencies are basically going up. But you might be saying, okay, well, isn't SoFi in the same boat? What's wrong with that? Even if they have a high credit score, it's likely that even some of the high credit score users or customers might also be facing this problem. But then you look at, here's this interview that Anthony Noto did, and this is September 4th, right? So this is a like 2 weeks ago. So I'll just play it.
So when you see the market throw a big fit like we saw yesterday on worries that maybe they're not pricing the recession as much as, say, the bond market, what do you think? It doesn't sound like you're seeing any kind of big red flags.
Well, I'd say two things. One, we do have a higher income customer, and they also are higher in credit, so they're not going to be fully representative of the broader market. A subprime customer would be experiencing different trends, and even middle America would be experiencing different trends. But I do believe what we're seeing is a piece of the puzzle.
So as you can see, he's saying that although SoFi's their main customer base, they don't really see as big of a problem with when it comes to like recession fears and things like that. He sees it in the broader market. So I feel like SoFi is more or less insulated just based off of what Anthony Noto says. SoFi Technologies, and SoFi Bank, they're more insulated as like as compared to these other banks that are taking bigger risks, right? These banks that are well known to be too big to fail, well, they're taking it quite a bit on the chin. And the other thing is also, a lot of the times on Wednesday when the rate cuts came out, there was a prediction that very few people actually predicted that a 50 basis point cut would occur. But in the same interview, going back, I don't know why I keep, in the same interview, Anthony,
if we don't see Fed action of 25 to 50 basis point cuts, then the concerns on the macroeconomic front will become a reality and we will go into a recession.
Right? So Anthony Nero predicted a 25 to 50 basis point cut. So in their mind, they were already kind of preparing for this and acting accordingly. In my opinion, you really do see that SoFi Technologies is in a position where they are both the least risky and also have the biggest opportunity to grow and to basically take advantage of the situation than I do believe most of the other companies, right? Where you have all the other banks like the JP Morgans, the Bank of Americas, they're basically dealing with all this delinquent debt, right? All these things that they have to write off. And so they're kind of working with like one arm tied behind their back, whereas SoFi Technologies is in a position where they're ready to take on, like, to capitalize as much as they can. So I think that that's really, really bullish. And the other thing that I know, another bear case that people always threw out for SoFi Technologies is, well, I mean, SoFi is just an online bank. I mean, Chase can do that instantly. Bank of America can do that instantly. They can do that whenever they want. They also have software teams and things like that. Let's look at this one. Basically, this article is basically saying that more and more people are deciding that they'd rather just do everything online, just do a quick deposit. Consumers are less likely or less willing to have to go to an actual brick and mortar bank. But I want to ask you a question. So, imagine you just had, like, just something off the table, right? Something on your table. Just grab something on your table. I have this pen. If I were to, in front of your face, just take this pen, if someone were to take this pen away from me, I would feel a sense of loss. I'd be slightly annoyed, even though I have not used this pen in probably the past 3 months. So that's the thing. With people, even when they don't use an option, if someone loses an option, they just feel like, mentally, they feel like they lost something, and they feel like they were either cheated or they feel like they were, like, someone stole something from them. So you can say that, yes, Chase, yes, Bank of America, yes, Wells Fargo, they can just close stores, right? They can lower their overhead, but they lose, or like at least a lot of their customer base will feel like they lost something. And when a customer feels that loss, or they feel like something was taken away from them, then their opinions of this institution that took it away from them, or at least like shut it down, they feel like they stole something from them or they took something away from them, and there's a higher probability that they might look for something else, right? They might have a negative emotion towards that institution that shut down, right? Even if they haven't used that institution's that specific product, in this case the brick and mortar bank, even if they haven't used that bank in the past however many months, however many years, they still feel at loss. And that's the thing, because SoFi Technologies, they started out with 0 banks, so there's no loss aversion. There's no appeal to loss aversion with SoFi, because you just never had a bank to begin with, right? Customers joining SoFi, they didn't have the expectation of being able to go to a bank. Whereas when, let's say, like, your old grandma, like 75 years old, like, she lives next to or like around the corner from like a Chase building or maybe a Citibank building. If that building were to fall, or if that building, sorry, not to fall, if that building were to close and then Chase was trying to switch over to only online banking, they might lose that customer. They might lose that customer because of this innate human desire to, like, avoid any type of loss. I feel like that bear case that a lot of people mentioned before about how, oh, the big banks can do it whenever they want. They can't, because they know human psychology. If you lose something, even if you don't use it, you have a negative emotion towards it. You have a negative feeling towards that loss, you just took it away from them, whereas SoFi doesn't have that. So I think that's a really big bull case for SoFi Technologies that not many people are really talking about. Just banks are, even though they technically can drop their banks and drop their brick and mortar buildings, I don't think that banks are as willing or as capable of doing so as analysts predict. Now, so those are all the kind of news stories I feel like are more or less kind of important. So let's talk about the stock price action, and let's talk about TA. So, really bullish. Oh, I need it. So, it's relatively bullish, right? So this is the daily chart. We spiked up above here, right above this descending trend line. Oh, how do I? Yeah, there we go. Right, and then we ended the week actually above it as well, which is pretty cool. Right here, or at least kind of riding on it. So I think that's really good, really bullish. So it could break down, right? It could always break down, but I think that it's bullish just that the fact that we landed on the line. If we look the weekly, so let's zoom out a little bit more. I think the weekly is slightly more bearish. You can see that line, but that looks like a really strong trend line, just going back all the way back from the very beginning, right before this pop up here. And it looks like we're in this wedge, and it's possible. Where'd it go? Where'd that line go? Oh no! What'd I do? Oh, there it is. And delete it on accident. Anyways, it's spiked up right there, right below that wedge, or at least right on that wedge, and it's possible. I mean, like right. I'm assuming like maybe if there is some type of black swan event, we might drop back down to, I would say, around 550. I do see a line at like right maybe here or here. This is possible, but like, is it probable? I don't really think so. There's no real gap that we have to fill or anything, so I don't really see that happening. But that is going to be like, in my opinion, like my version of max pain, right? It going all the way down to 550. But it is also possible that we stay above this trend, stay above this. I keep doing it. It is possible that we stay above this line, and then hopefully rotate upwards as the economy and as basically people rotate into financials, fintech, banks, etc. Especially with the new economic cycle of just rate cuts. So those are my thoughts. Just really quick technical analysis. It honestly is like not the best technical analysis, but that's just what I see. Hey, some of them worked, right? I think my technical analysis on Spire is pretty good, but that's just my opinion. I think SoFi is in a really good position to just grow as much as it can in this, while basically you have the banks with all their delinquencies, you have the fintech, they're not able to maintain their rates because they rely on other banks, right? SoFi is in that sweet like golden center where they're able to expand on all fronts. So those are my thoughts. I don't know. Do you have any opinions? Did I miss anything? I feel like there's so much news that there's no way I can read all the articles and everything. Right? I try to look at things that more other people aren't really talking about. So I don't really like to go into. So I don't really talk about like rate cuts. I feel like everyone and their mom talks about rate cuts, right? So I'm just trying to talk about the things that maybe see the rate cut in a different angle, or maybe see certain news in a different angle, right? Those are my thoughts. I'm still really bullish on SoFi. It's my biggest holding, so I mean, fingers crossed, right? All right, see you.